Me, if you can hear me, good morning. This is Emmanuel Udogu, and welcome to another exciting morning market review. We're going to start maybe in 2 or 3 minutes time. Let's just give more time for more persons to join. But then if you can hear me, let's use the chat room. So just okay, fine. It means you can hear me. Okay, maybe in the next 2-3 minutes we're going to start. Okay, thank you very much. All right, guys, I think now we can start. Good morning once again. This is Emmanuel Udogu reaching you for the beautiful city of Port Harcourt. And I want to believe all of you can hear me. Okay, please. We're starting just now. So this is our morning market review, what we call MMRO, which we do every day, right? From 8 a.m. to 9 a.m. in the morning, one solid hour of market analysis. So this is the session we get to give you tips and tricks how to navigate the market, of course, previews and reviews about the market, of course, so that, of course, you can come out profitable in your trade, okay? And also you can manage your trade very well, okay? All right, guys, so we are starting immediately. We are going to start from looking at the fundamental event. So you all know that there are 2 types of analysis majorly. So we have the fundamental analysis, and of course we have the technical analysis. So we always try to cover these 2 major forms of analysis on this section every day. Okay, so we normally start with the fundamental. So let's look at some of the fundamentals for today. Remember, fundamental is very powerful. That is what sets the pace for the movement of the market. Then we now call it technical, right? So of course, technical is historical price analysis, but then it is fundamental events that actually set the move. So you don't want to ignore fundamental, right? You don't want to ignore fundamental. Please, if you can hear me, let me be sure. You just type at the in the chat room. You just type if you can hear me. I can hear you. Just type something like that. Then I'll be sure you can hear me, please. Guys, you can hear me. Just indicate. Okay, I can see you there. That's cool. That's cool. That's cool. Thank you very much. So let me share my screen now. I want to share my screen. All right, quick one. Let me share my screen. Just hold on a bit. Uh, so I've been able to do that. So just check if you can see my screen. I've been able to share my screen. Just check. I am on forexfactory.com. So this is one of the websites where you can check for news. So what you want to do is every day just visit this website. It will help you, especially for the newbies. It will help you. Visit this website, you get to see news, events that can affect the markets. Now, I jokingly say, I normally say fundamentals have no respect for technical analysis. That means uh, you cannot do without fundamentals, right? So you want to always be aware of the news. So this is one of the websites you can use, Forex Factory. You can also use investing.com, right? Or you can also use tradingeconomics.com. So there are several websites you can use, okay? So there was a day I actually opened this website, Forest Factory. I saw that they were working on their site. So then it's not good to be stuck just like that. So I actually use investing.com. So you can use investing.com. You can equally use www.tradingeconomics.com. So for this fund, for this Forest Factory, yeah. So quickly, this is the date of the news. Of course, this is today, right? So today being the 24th of October, Tuesday, the 24th of October, 2023, right? Now, of course, this is the time of the day. And this is actually our local time, right? So this is the currency the news will affect. Currency, not currency pair. Please take note, especially for the newbies here. Currency, not currency pair, okay? So actually, there is a difference between currency and currency pair, of course, you know. Now, of course, it affects this currency, and also it tells you the country, right, or the destination where this news are emanating from. Then this is the impact. So our focus is always on the impact, especially the red impact, right, the high impact news. So this red impact means high volatility is expected. That means high movement. Volatility is the rate of change of price with time. So this means that the price will change very fast, right? The price will move very well. That's it mean. So, and of course, you know that we traders wine and dine on the volatility. That means without volatility, there is no trading. Without volatility, no pips movement. Without volatility, no money. We don't make money. We need movement. That's simple as that. So that means when anytime there is a red news like this, we want to pay attention to it. Like for today, 7 a.m. This one has passed. 7 a.m. has just passed, right? So we saw this claimant count charge from the UK, claimant count charge. So this is actually for those claiming unemployment benefits, right? Claimant count charge. So for those of us new here, most of this caption may be sounding very strange to you when you get started, but guess what? That is how learning begins, right? It starts from a point where you don't really understand to the point where you gradually start to understand. Then of course, now get to the mastery aspect of it. So so you are to open the folder. So this is the folder. You just click to open it, right? So it will give you literature, right? Or it will try to explain what the news is about. So changes in the number of employed people, changes in the number of people claiming unemployment benefits, unemployment related benefit during the previous month. So actually, claimant count charge in the UK is just a track, right? Or it tracks those that are claiming unemployment benefits. In other words, it is telling you the total number of persons that are unemployed. So in other words, it tells you the unemployment rates, right? It tells you the unemployment rate. So that means if more persons are claiming unemployment benefits, it means more those persons are not employed. And of course, you know, if they are not employed, it means it has a negative, it can affect the economy negatively, right? All right. So as you can see here, the number is red, right? So you can see that it's red. That means so actual less than forecast is good for the economy. So if you look at this actual, this is 20K, this is 2.4K. So actual is actually greater than forecast. So that means more persons are filing for unemployment benefits. So that means it is bad. So that's a bad news for the for GBP. Okay. Then of course for today, 8:15, right? Just 1 minute to the news. So we have the PMI. So this is actually a world PMI day, right? So PMI from every quarter. So PMI means Purchasing Managers Index, right? So it is actually one of the survey, right? One of the earliest indicator, earliest measure of the health of the economy, right? So it's a system where they ask responded to rate the relative business condition concerning employment benefits, labor, prices. So they just ask purchasing managers in different sectors, right? So it can be manufacturing sector, it can be in uh, the service industry to rate how the business, the relative business condition is doing, right? So from that rating, they get a value. So if that value is greater than 50, right? So above 50 indicate that the economy is expanding, right? So of course you buy that particular instrument. So below it means a contraction, right? So that's what it means. So as you can see here, we just have this 8:15. Guys, I hope we are still following. So we just have this news for 8:15 here. As you can see, it came out so the French flash. So there are actually two. There's a final, there's a flash. So the flash is always stronger than the final. So they are both separated by a week. Okay. So the flash comes out before the final. Okay. So this is the flash. So this is French flash manufacturing PMI. So this is for the manufacturing, this is for the service. So for the manufacturer, it came out as red. That's bad, right? For the French, for the service, it came out as green. That's good, right? But now this is good, but not very good. Okay, good because it is greater than the previous, but it's not actually above 50. So if it's above 50, that is when it's very good. So you get to see more impact. So that means we expect the euro to be a bit strong. Of course, from the charts this morning, the euro is already very strong. Okay, so but of course you can see this is a bad news, a good news. So it's somewhere at equilibrium. Okay. So the 8:30 also we have this same news but this time around is from Germany, right? Both manufacturing and of course on the service. Guys, are we still together? I hope you guys are still following. So we just have several of them. So that means you want to keep your eye on the charts, right? Or if you have a trade, you want to, of course, use stop loss and of course take profit on your trade in case of any unforeseen dangerous spikes. Okay. So let me dive straight to the chart so that I can show you all of this. So okay, for still today, okay, we just have PMI everywhere. PMI from USD, PMI from CAD, PMI from every quarter. They're all PMI for today. Okay, so let me switch straight to the charts. Okay, thank you very much. I can see you say I'm following. That's good. Let me switch over to my chart so that we can look at technical analysis. Okay. So quickly, I have switched over to the charts. Guys, I've switched over to the charts. You can see my chart. Just do it to type chart for me. You can see my chart. Please type chat for me. Thank you. Thank you. You can see my chat. Type chat for me. Chat. Okay, thank you. Thank you. You guys can see my chat. All right, let's start from the USD index as I always do. I'm going to look at the H4 time frame, right? Now, the reason why I'm looking at H4 time frame because there are different category of traders, right? So there are some traders that wish to hold their trade for a longer time, right? There are those traders that have a bigger capital compared to those that don't like to hold their trade for a longer time. Okay, so if you're the type that is always very busy, don't really have time to always be checking your screen, right? Then you can be trading in a way that you hold your trade for a longer time. Okay, so there are those that use H4 time frame, right, to look at what the market is doing. So from what we can see here, the market keep breaking structure to the upside and respecting the lows, but suddenly you can see that the market is now trying to take out this low. So this has been the established low, right, which we call verified support. But as you can see right now, the market is gradually, or price is gradually trading below that verified support. So this is where we can say the price on the H4 time frame, please. So this is where we can say the price is now there is now a shift, what we call the market structure shift, right? So there's a shift here. The market is trying to shift to the downside. Why? Because on the upward trend, it is of course higher highs and higher lows, right? As you can see, higher high, higher high, higher low, higher high, higher low. But this is the first time the market is trying to give us a lower high, because of course, if this price trade lower like this new point becomes a lower low compared with this low. Okay, so that's what we call a shift, right? So that's the first sign of weakness of the upward trend, right? The first sign of weakness. But you know what this market is all about? This market can still dip this much, right? And of course plumb impulse to the upside, but let's just keep our eye on it, right? So we're already seeing weakness in the dollar, right? So until this low is taken out, we've not seen the weakness. But right now, we already start seeing weakness in the dollar. Remember, this dollar was ranging, right? It was ranging inside this box. So if you drop down to H1 time frame, you see that range very well. Okay, so this is the range. So that means for the past I mean, there's 1, 2, 3, 4, 5, 6, 7. For the past 1 week, the dollar has been ranging, right? So you can see range. So this is what we call range. It keep trading sideways, right? So it traded from here to here, from here to here, from here to here. So it has been range, but this is a break out of the range, right? So it broke to the downside. Okay, so that force that took it out of this range is actually the same force responsible for tapping this protected liquidity. So that means remember, this level here has been our protected liquidity because we are on the upward trend. But right now the market is going for that protected liquidity. By liquidity I mean money, okay? Because money is fluid, right? It's liquid. So this price is going towards that protected liquidity. So that means that's the first sign of change in direction, right? So those of us still holding our buy position, you may want to give up right now because the market have given us first sign of change in the structure of the market. Now let's look at Euro USD, please. Let's start with Euro USD. So let's look at Euro USD. So for Euro USD, of course, this market has been going downward. Now, guys, you know, one thing about this market is that the trend, of course, you should know the trend very well by now. So the trend is actually your friend. You must have heard that very well. But then there is a clause at the end. The trend is your friend until it bends at the end, right? So that means why the trend is your friend, while you're riding along the trend, this is what I mean, while you're following the trend direction, which is good. Take note, a time will come when it will bend at the end. So that is what we are seeing. So we are seeing a bending, right? It's almost sounding like iron bender. It bends at the end, right? So the question will now be, what sign should I be looking at for, right? To know when the market or the trend is about to bend at the end. of course, the truth about the matter is that is at the point where most persons get to take some amount of losses, right? When it bends at the end. But trading is all about making bigger profits, smaller losses. So one of the secrets of trading is cutting short the losses. So that means, and of course, that is where stop loss comes in, right? So big loss is not actually stop loss. So controlled loss, small loss, right, is what we call stop loss. Okay, so for a successful trader, you should have a controlled risk. You can't see my screen? Is it true? The rest of us, please. Can you see my screen? Someone is saying they cannot see my screen. The rest of us, please check. Can you see my screen? Okay. You can't see my screen, but you can see it now. So this is H4 time frame, please. So quickly, let's look at what is happening here. So the market have shifted to the upside. How do I mean? It has taken out this high, right? It has taken out this high. Of course, that's the first sign that it has shifted. By taking out this high, I mean the market have traded above this high. You know, above this high is what we call protected liquidity. But right now, the market have taken out that protected liquidity. So see what I mean? So this is an impulse to the downside, of course, retracement to the upside. Into the downside to take out this previous low. Okay, so that means taking out this previous low is the protected, is the targeted liquidity. So he took out this low, right? Took out the targeted liquidity. Then of course it traded up somewhere here. But let me just do this. So this is the first time it's trading above this high, right? So that's the first time. So this is the same thing we have experienced on the index, the dollar index. So we have just seen this happen on the dollar index, right? So it has taken out the protected liquidity, right? So of course, that's the first sign. Then of course you keep an eye on it. So see it nosedive again, right? But if you notice, it did not take out this low. So that means this low becomes our protected. It has changed from target direction or target liquidity to our protected liquidity, right? So right now you can see that it has taken out this high, so it has formed a new high. So guys, the Euro USD on the H4 time frame is not trading to the upside. That's what it means. So that is what we call directional bias, right? But if you watch this movement, give us a higher high, higher low, all of that. Now, since we have broken structure to the upside, right? So by that I mean the market trading above the recent high. We call that a break of structure to the upside. Okay, so don't allow this grammar to confuse you. It's just simple things. So if the price trade above the recent high, right? So that's a break of structure to the upside. Okay, so whenever we have a break of structure to the upside, we normally expect a retracement, right? So I will not be expecting much move from here, even though the market can still give us more momentum impulse to the upside. I'll be expecting a retracement, right? I'll be expecting a retracement. I'll be expecting a retracement. That retracement, I mean, I'll be expecting some level of weakness, right? Okay. So how much retracement will be a good will be a good retracement? How much retracement will be a good retracement? So I can use my Fibonacci retracement. That's the job. So I will draw from this low. Why this low? This low because it was this particular low that is responsible for taking out this high. So I'll draw from that low, of course, to this high. Now, the reason why I'm drawing to this high is because I am assuming this is the highest high, right? But guess what, sir? If during the course of the hours, let's say 1-2 hours from now, the market impulse further to the upside, then I have to come and adjust this to the new high, okay? So I'll draw to this high, then of course, I'll wait for retracement, okay? I'll wait for retracement. So I'll wait for the market to trade further into this 50%. So if the momentum is very strong, the first sign that the momentum is strong is that it will not trade into the 50%, right? So it might just trade into maybe 23.6 or trade into 38.2. So these are the two Fibonacci golden ratios, right? Or levels where the market can retrace to show that the price actually has a stronger momentum to keep moving much to the upside. Okay. Okay, so we are already seeing some red candles here, right? Already seeing some red candles here. Okay, that's fine and good. All right, so I'll drop to H1 time frame. Let me give you entries here so that we can move on. I'll drop to H1 time frame. Time is really moving very fast. So I'll drop to H1 time frame. Now, since you are booking structure to the upside, I want to do a buy. Please don't forget that. We're booking structure to the upside on the H4 time frame. So that is the essence of looking at what is happening on the higher time frame, is so that our trade can go in line with what is happening there, right? Our trade can go in line with what is happening there. But you know, okay, there's a lot of message here. Let's look at what we have up here. So you are saying how we draw Fibonacci. It's very simple, sir, to draw Fibonacci. So you just of course this particular session on Zoom, we're also live streaming this on YouTube. Okay, so you can equally go back much later to watch again the way I'm drawing it. So you pick the Fibonacci, so you draw from the low to the high if the market is trending upward, right? Or you draw from the point A to the point B. But your point A is very, very important. It should be a low that actually took out the high. Then so please, that's how you draw Fibonacci, okay? Or you draw from a point A to the point B, or you drag. So if the market is trading down, you drag from the point A to the point B. That means from the high to the low. So you said Modesta. Please help me. I have been trying to get Fibonacci on my phone, but I haven't. Very simple. To get Fibonacci on your phone is very, very simple. It's not hard. So on your phone, what you do is you open the MT4 on your phone. So if the MT4 is open on your phone, the next thing you do, you go to drawing. Okay, so you go to drawing or the toolbox. So if you look at the top please, I'm trying to answer you, Modesta. Okay, if you look at the top of the MT4, right, like you should be on the chart, right? You know, there are several buttons there. Please, you have to be on the chart. So if you're on the chart, so look at the top. At the top, you will see a cycle. You will see a rectangle. You also see a triangle. Those three things joined together. That's a toolbox, right? So you click the toolbox. So you click the toolbox. Having clicked the toolbox, you click the plus at the top right. So once you click the plus at the top right, then you go down, you will see a line menu. You go down again, you see channels. You go down, you will see Gann. There you go down, you see Fibonacci. Are you still with me? You go down, you see Fibonacci. So once you see the Fibonacci, the first option there is Fibonacci retracement. So you touch that button, you just touch it, come back to once you touch it, to take you back to your chart. So you're back to your chart right now. The next thing you do is you click right from the point A and drag on your phone screen to the point B. Please, Modesta, this is how you can draw it. I hope you understand that. Okay, okay, I have another question here. Wow, these questions are just so much. I hope we're not just going to remain on Euro USD alone. You're asking, wow, see questions everywhere. Okay, let's just take the one that we can take. Okay, so most of these questions, please, you can ask offline. Okay, I will drop my number at the end so that we can analyze as much instrument as we can. Okay. So you're asking if the retracement doesn't come down to 50%, what does it mean? It means if it doesn't come down to 50%, it means the market is in a hurry, right? It means the institutional traders are in a hurry to take the price to a particular level. So that means drop down to maybe 23.6 or even 38 30 what now, or can drop down to 38.2. So those two are the areas it can quickly drop down to them before. So I think I've answered that one, right? Say please drop your number now. You have to wait till the end. Okay. Hello sir, you wait till the end. It's at the end I drop the number. So you're asking if you can take advantage of the retracement to the downside. Of course, before you can take advantage of that retracement, remember the price is heavily pumping upward, right? So since the price is heavily moving all upward, before you can take an advantage of this, you will need to see what we call change of character at this top. Change of character is the first sign of violation to the upside. I mean, that means the price must trade by that violation, I mean, remember for this upward trend, we are having higher highs and higher lows, right? So you must first see the first lower low. That's the violation of the upward trend rule. So that's before you can do that. If not, you might just be shooting yourself on the foot. So this is H1 time frame. So you want to drop to maybe 15 minutes time frame to see that. Okay, but for now we are not doing that. So what we're doing is we are looking out for a buy signal. Okay, so I would like to do a buy if the price drop below. So I can see a very strong momentum here. So I can do a buy if the price drop to this level here, right? So that's where I can do a buy, right? So this 38.2 level on Euro USD. So on Euro USD, since we have seen break of structure to the upside, I will wait for a retracement on this level. So this is what I'm talking about. The price have to retrace to this level. They'll start doing a buy. Okay. But for the aggressive guys, if you drop down to 15 minutes time frame, looking out for that change of character, right? Have we seen a change of character? See what I mean by change of character. Let me show you. So remember, this is upward trend. This is higher highs, right? Upward trend is characterized by this a high, right? And of course, this is a lower low there. Of course, this is a new high, right? Of course, this high is higher than this high. Then again, this is a new low, right? Then of course, or maybe this low, this low can actually be this one, right? Oh, I'm not drawing here. Can be this one. Fine. So this is the first sign. So you can see the market has actually traded, right? This is the wow, a lot of lines here. So this is the first time it's trading below this low, right? So that's the first sign of change of character there. So, but whenever we see that, we normally wait for a little retracement. That will give you a much premium price. So if the price retraces a bit towards this level, I would like to sell. So you want to sell at this price, 1.06. Now you can enter immediately, or you can wait until it gets to this level. So which one should we do? Let's do the aggressive entry. Let's do one aggressive entry there. So I would like to place a sell. So that's an instant sell there. So this sell is actually an intraday setup, right? Or what we call scalping setup. So that means it's not a long trade, right? So it's a very short trade, right? To take advantage of the retracement towards that 38.2 Fibonacci level. Or you want to wait for the price to retrace further to this level, 1.06781. So guys, we've used too much time on analyzing Euro USD. It means we have to be very fast on other instrument. Okay. So take my take profit, we have to be on that 38, right? I did an instant sell. My take profit, we have to be on that 38 point 2, right? That's my take profit. And of course, my stop loss will have to be above this high. So that is why it's actually a scalping technology here, okay? Right? It's a scalping trade. So that means if it breaks this high, then we're out, right? So that shows that the momentum is very strong. So let's do GBP. Please, we took an instant sell, okay? Let's do GBP USD. So please, pardon me, the amount of questions that is coming in at once, if I'm to take all of them, it means we are only going to remain on Euro USD throughout this 1 hour. Okay, so please, you have your account officer's number. You can ask them some of these questions, right? Or you can get to the office across any of the location. Then of course I'll drop my number so that you can equally get through to me. Please, my number is on WhatsApp, okay? So most of you will need to just drop WhatsApp message. So on GBP/USD, let's see what's happening there very fast. So we're not going to take too much time on GBP/USD because GBP/USD has a very strong confluence with Euro USD. Strong correlation, I mean, please. I mean correlation, please. It has a very strong correlation, up to 80 to 90% correlated. So that means, by that I mean, whichever direction Euro USD is going, GBP/USD tends to also go in that same direction. So that means, it simply means if you're buying here, you will be shooting yourself on the foot if you're selling at the other side, okay? All right, guys. So for this GBP/USD now, so the same thing, the instrument is trading towards the upside, right? It's trading towards the upside. So, but then if you drop to a much lower time frame, 15 minutes time frame, you could be able to see some sign of excuse me, you could be able to see some sign of trading towards the downside, right? But then the same thing we did, so you can see GBP/USD is giving us a higher high, right? And of course, higher low, right? And of course, higher high. So now for GBP/USD has not actually broken this low here, right? It has not. So that means we are not doing that sell yet. So we are only going to do the sell if GBP/USD can break below that low. Okay. So let me give you an entry here. So if GBP/USD trade around this region, I would like to do a sell. So once it trade below the opening price of today, right? So that will be around 1.22440. So I would like to sell. So that will be a short sell for intraday traders. If not, this is still very much bullish. So for a short sell, right? 1.22440 to 1.22335. So that means I'm not selling immediately. I'll wait. For Euro USD, we saw a reason to sell, right? We saw a reason to sell because it broke that structure on the 15 minutes time frame, right? So then for GBP/USD, 1.22440 to 1.22335. So around this area, you want to do a sell. Otherwise, then you want to wait for a good retracement so that you can continue the buy to the upside. So actually, it is that retracement we are trying to take advantage of, right? So this is the retracement, right? So it is this retracement to the downside, right? What we call impulse, a pullback to the downside rather. So a pullback to the downside, which can be on 38.2, right? Or even 23, right? So these two levels. So actually, so if it retraces this much, then especially this 38.2, right? So guys, let's look. So I think I'll just give you an opportunity to mention any other instrument you want us to analyze. So Lizzie there, you say we should do Euro JPY. So let me look at Euro JPY very fast. After Euro JPY, they will now start looking at after Euro JPY, please we'll look at gold, okay, and oil. Remember, JPY is one of the safe haven currencies. So that means during times of uncertainty, we normally see a lot of inflow, right? Or a lot of investors going towards that. But guess what? From what we are seeing on this chart, right? Okay, let's do from H4 time frame, please. So from what we're seeing on this chart, please, you request for this and I'm giving it to you, right? You requested for Euro JPY. So from what we're seeing here, we are already seeing massively the price is trading towards the upside. This is what I mean. Of course, then we have a retracement about 61.8% of that, which is healthy. So of course, it gave us another impulse that took out this high. That's break of structure to the upside. So please, once you can see this kind of movement, you conclude that the market is now riding on the upward trend. So what we try to do here is we only don't give you the entries. We try to show you how we are getting it. So over here, we have relatively. So let me zoom in a little bit. Over here, we have relatively equal highs. So if you're having relatively equal highs on an upward trend, so that is actually a magnet, what we call a trap. So that alone will pull price or will attract the price further to that region. So please, this is where most of the money are hidden, right? So anytime you have relatively equal highs like this in the direction of the prevailing trend, guys, you can make enough money from that move. So once you have this, right? So because this is actually trying to deceive traders, right? That this is a double top. Okay, so most of them will now start doing only selling, right? Expecting that the market will not thinking this is a reversal, right? Well, guess what? The trend is much stronger. The direction of the trend is much stronger. So the next time the market will be attracted towards that relatively equal highs. Okay, so the market was attracted towards that relatively equal highs. Took at this high, of course, there is a lot of money trap here, stop losses, right? So took at this high and of course form a new high. So from what we are seeing, so this becomes our new low. Why? Because this was the low responsible for taking out these highs, and a strong high at that, right? A strong high, because it's double. So I'll just draw my fib. I hope you're following up this analysis. You requested for this and I'm giving it to you. I'll just draw my fib from this low to this high, right? So you can see the market is trying to put in a retracement for us, right? Those of us that took the Euro USA instance, I'm sure you're already seeing some profits, right? So we are getting a retracement. So the market is actually putting in a retracement to the downside, right? So this is the kind of retracement that is healthy for the trend. Fantastic. So we expect the retracement to come down as low as 50%, right? 50%. So you want to wait, right? To continue buying the euro, you want to wait until we have enough retracement, right? 50%. It, right? There's a way I normally do it. So sometimes while waiting for it to get to 50%, it may not really get to 50%. It might stop somewhere around 38.2 and of course turn again. So what I normally do is I can divide my lot size, right, into smaller size and of course bigger size. So that is why whenever I'm entering a trade, I normally jump in with a smaller lot size. So if the market gives me more retracement, or if you like more premium price for a sell or more discounted price for a buy, then I will now enter the bigger lot size. So that means I can enter that smaller lot size on 38.2, right? and of course I can complete it further if I have more retracements. I hope we are following. Guys, are we following? So on Euro JPY, I would like to do a buy, right? I would like to still buy at around 158.910. So around this area to 158.675. So sir, just look around this area. I would like to do a buy. If I have more retracement, enough retracement to this level, I want to buy, right? So I'm buying at that level. If I'm buying, okay, let me just give you the right, then my stop loss of course would be below this low. Then of course my take profit will be ×2 or times more than 1 of that distance. So this high, right? So I'm buying somewhere here, right? My stop loss will be below this recent low, right? Because this low is a strong low. Then of course my take profit will be above this high. Now let's look at gold very fast. Gold. Now we have been seeing a lot of impulsive move on gold for the past 2 weeks to the upside. So I mean gold has really been moving upward. Where is gold now? Gold has really been trading up to the upside. Why is it so? It's so because of what we call safe haven. So that means during crisis period like what's happening right now between Israel and Hamas, we pray for peace, right? But then we are traders, okay? So we trade whatever is happening in the global economy, right? That's what we do here. So let me drop down to daily time frame. So you can see after this gap, remember you're expected to only be buying. So please, this gap actually means pressure to the upside, right? So you can clear it. You do not take advantage of this gap. Just maybe in the future, you might, I'm sure you will actually meet gap, right? As a trader, you must always meet gap. So actually there are two types of gap, but let's not go into that. Gap actually means force, right? Or pressure in that direction. So this is a pressure in that direction. Which direction now? In the direction of the gap. So this is actually a gap up. So there's a gap up, there's a gap down, right? So it actually gap upward. Now, usually when it gap upward, it normally creates an inefficient price, right? Inside that gap. So usually we expect the market to trade into that gap, right? Or cover the gap even if up to 50%. But you can see here, it traded inside, but you not even cover it up to 50% before keep pumping to the upside, right? So of course that shows you the urgency of the move, right? Or the momentum behind the move. So you can see all of these movements, right? So if I drop down to H1 time frame, that's a whole lot of movements. So you can see here, that's a whole lot of movement, right? So what do we say now? Do we say the momentum is off? Not yet, not yet, not yet. The reason is I think following what is happening in Israel and Hamas. So the news just this morning or even yesterday, where is that news now? So US, so let me share my screen so that you can see the updates, right? So this is just early yesterday. So this is from FS Street, right? So US advises Israel. US advised Israel to hold off on Gaza invasion, right? So that means they have advised Israel to hold off, right? Or to hold on a little bit, right? Something like that. So that is why the market, that strong bullish momentum that we have been enjoying has eased off a little bit. So that is where it's coming from. But then if there is more escalation in the coming days, guess what? This instrument has to trade towards 2000. No, gold is actually heading towards 2000. So see where it stopped. It stopped at around 1997. $0.36, very close, just $3 shy away from $2,000 per ounce, right? So left for me, I will still be looking out for buy signal on gold, because if you're looking at technically what we have on the charts, right? If you are looking at technically what we have on the chart, we have an impulse to the upside. This is H1 time frame, please. Then of course we have retracement to the downside, right? So actually we were expecting, right, another impulse again, right, that will take out this high. But see how the market has been trading sideways, right? So it has been ranging. The reason for this range is because of this news I just read out to you now. So this is still another impulse to the upside, then another retracement to the downside, right? So that is what the market has been doing. So this is what we call upward trend, right? But you can see how this market has been ranging, right? But guess what? This is the low that must be taken out before we have switched to the market have shifted. So this is the low. So this low has been respected, right? So a much lower time frame so that I can give you some entry. Yeah. So I am still looking out for buy signal, right? So I think yesterday I saw what we call a fair value gap, right? An inefficiency here. So this is it here. Let me show you. So you can see this week. Look, you can see this week, right? This upper week and this lower week, right? So that this space between two of them is what we call inefficiency. So usually when the market does something like this, the market quickly trades back into it, right? So let me show you the trade I took yesterday. So you can see after this gap, it moved up, right? It traded back into the gap. Now it may not do that only once, right? So I can extend it into the future. So that becomes the area I'll be looking at for, right? So that means if gold today, please take note, you can make a lot of money from this. If gold today trade back into this area, then I want to do a buy. So if this retracement, right, continues further into this area, so this is my choice area for a buy. This is my choice area for a buy. As you can see, the market has been testing this level to be a support, right? So this is where I want to do a buy. So I will be buying at 1970.73. So 1970.73. 1970.73. That's where I will be buying to 1968.41. So anywhere around there, I would like to do a buy. So guys, once this price retraces further inside this area, I would like to buy. So if I should buy there, of course, so let me be very specific here. Let me drop a line. So if I'm buying anywhere inside this box, so it's actually a range of price. My stop loss will have to be below this low, right? So just below this low, because once this low is taken out, the market have shifted to the downside, right? So once this low is taken out, it means your trade direction is wrong. Okay, so my stop loss will be here, and of course my take profit will be here. So you're going to be using a buy limit for this trade. So my take profit will have to be above this high, right? So this is like more than 1:2 ratio, right? So this is for gold, please. So Sunday, you say you lost your account to US 100. Sorry about that. You did not use stop loss on that trade, right? You didn't use stop loss. So how do we get to calculate your stop loss? Very simple. You can use FS calculator to do that. So you can just go to your app store or Play Store, download FS calculator. I think that this is for, okay, your name is not there. You say, how do we get to calculate our stop loss? You can use FS calculator, or you can use the general rule of one standard lot, $1, $10 per pip, right? One mini lot, $1 per pip, one micro lot, $0.1 per pip. That will also help. Or you can just go straight to your app store and then download FS calculator. So let's look at oil, right? So I have a trade here on oil, and I've been holding that trade for a long time. I have a trade here on oil, and I've been holding that trade for a long time, expecting more impulsive move to the upside, right? So look at the trade on oil here. So following the escalation and of course the war, right? So I was expecting oil to go up. Of course, it went up very well, but then he said that, so see where he started moving up from. Okay, let me come down to H4 time frame. So it moved up very well from here, right? So this is upward trend now. Of course, you can see this. You can see where the trade was entered from, right? So then, of course, you can see the tenets of the upward trend. By that, I mean a high, right? And of course, you can see a high, and of course, you can see a lower high. Then you can see a higher high. Then, of course, you can see a lower, right? So this low was not lower than this low. Fine, fantastic. Then you can see a new high. So I was holding this trade because I was holding this particular oil trade, and you can see just a small lot size, right? Depending on your account size anyway. So so this high keeps getting higher. Of course, that is why I was holding it. But in recent days, you can see that the market just plummeted, right? Or nosedive this much, right? So, but then I did not close it because, of course, I've protected the profits, right? Did not close it because where is it now? It did not actually break this low, right? Did it break this low? No, it did not, right? It did not break this low. So that becomes relatively equal lows, right? But opposite the direction of the trend, so which is a good one. But if it is in direction of the trend, it makes a magnet for the price. So I'm still expecting oil price to pump up further following the escalation, or of course following the crisis. So if that crisis continues, oil price will go up this much. But as you can see, oil price is on the support right now. So let me give you a signal on that. Oil price is on the support right now. So let me give you a signal. Of course, this software calls it verified support, right? So on this verified support, you want to do a buy. So I will be buying oil. I would like to buy oil anywhere around here, right? So if the price falls a little bit, because it has left where I would like to buy, right? It has left where I would like to buy. So you may want to enter now for instant buy, but I wouldn't want to do that. I want to wait for the price to fall into this area before I'll be buying, right? So I would like to buy anywhere around $89. 0.93 cents, 0.85 cents, anywhere inside here, I would like to buy. So once this oil price retraces a little bit, right? So why am I waiting? I'm waiting for a much lower price, right? So if the price retraces a little bit inside this area, of course, it's already doing that. I would like to buy. So guys, we are buying oil at 89. Please, if you have small account, you don't want to trade oil. If you have any account less than $100, you want to do a top up on your account. I mean, add more money to your account. Okay. Add more money to your account. What is the money doing in the bank? It's not there is no multiplication of your money in the bank, right? The money is idle. The money is doing nothing. So please, you want to fund your account. Most persons are afraid. I say, if I fund this money now, it doesn't mean that it simply means that my money is at risk. No, your money is not at risk. You are the one in control. For every trade you place, you are the one to specify, right? How much of a capital you're willing to use to trade. So you can specify it. I'm only using 2,000 naira. I'm only using 5,000 naira. That's what we call stop loss. So your money is not at risk. Most person is, whenever there is a high impact news, a very hot news, that's when they want to quickly fund their accounts. So you don't do that. You always make sure you always have money in your account. So reach out to your account manager on this, and of course your account manager will walk you through, right, on how you can do a top up on your account. So this is for all year. So I already have a buy, and I still want to buy more, right? So if you retrace it towards this level, then I might just be adding to the position. Okay. Now let me look at US 30 or D30. Which one now? So D30. Look at it here. US 30, D30, all having similar correlation. So this instrument has been falling here, as you can see, right? And there is a very, it's likely going to fall more, right? It's likely going to fall more. It's likely going to fall more. So what do we do? So if you watch carefully, this is a lower low, right? A pump again to the downside. So if it's likely going to fall more, I'll just look for a position to sell, right? I'll look for a position to sell. So I'll draw my Fibonacci, right? From this high to this low, right? Then I'll wait for retracement towards this level to sell. Now, just like the analysis we did the other time, I think that was last week, Tuesday. So the market did not retrace as much as once before it started falling. I think that was somewhere around here last week. This place started falling from. It did not retrace as much as we want. So most times the market may not retrace into the level you want it to retrace before it start falling. Okay. So that is why you have to learn how to go into a trade with a smaller lot size, then add a bigger lot size if it comes to your point of interest. I mean your choice area, so that it doesn't leave you and of course go in your direction. So now remember, I've analyzed this D30 that it will go down, right? It will go down. But guess what? This retracement may not really get to 50%. So once it gets to 38.2, I might start trying to fill in my position gradually, okay? So if it gets to 50%, I want to enter more. Now, because there are two ways to trade, there's an aggressive entry, there's a conservative entry. Ray Dalio, right, said you have to be aggressive to make money, conservative to save money. So you have to be using the two side by side, okay? For example, those of us that took the trade on the aggressive entry on Euro USD sell, I'm sure you are now basking in good profit, right? Because if you watch here, I'm also in profit here, right? Those that took the trade, those that are aggressive. Remember, aggressive to make money, sir. Conservative to save money. So that anytime you want to withdraw, you have money to withdraw. Okay, I think this is already past 9, even 6 minutes past 9, guys. I think we'll draw the curtain here. So we always have this analysis in the morning, 8 a.m. to 9 a.m. So if you miss any of the analysis, please just go straight to our YouTube, Rally Trade on YouTube. Please do wait to like and of course subscribe and share the video, okay? Then of course you can reach me personally on this line 09026264507. I hope you got some value from this analysis / training. So my name is Emmanuel Udogu. Thank you guys for staying till this time. See you on the next one. Okay, I think I am seeing someone here. I'm just going through the messages now. Please, this particular person, but I don't know your name. Please, I just dropped my number, so you may want to reach out to me, okay? You may want to reach out to me or your account or officer. Wow, you have said a lot of things on this chat. Please reach out to me, okay? Sorry about your experience. Reach out to me. Thank you, guys.